Welcome to today's What Moved the Market show. I'm your host Prem. It's Tuesday, February 3rd, 2026, and here is everything you need to know as the markets close for today. What a day at the bourses, folks. The Indian equity markets concluded the day with robust gains after hitting record highs during intraday trading. Nifty 50 closed at 26,308 points, gaining 520 points or approximately 2.79%. The Sensex, the 30-share benchmark, settled at 85,323 points, up 2,072 points or 2.54%. Bank Nifty delivered strong performance as well, finishing at 60,011 points with an impressive gain of over 1,400 points or approximately 2.4%. Overall sentiment has shifted markedly positive as investors continue to digest the union budget announcements and look for value opportunities after recent volatility. The markets displayed remarkable resilience, recovering from early session selling to close near all-time highs, signaling growing confidence among institutional and retail investors alike. On the currency front, the Indian rupee closed at approximately 90.12 to the dollar, marking a slight strengthening from the previous session. This modest rupee appreciation reflects steady foreign inflows into equities and reduced external pressures despite global headwinds. Let's talk about the standout performers on the board today. Among the top gainers in the Nifty basket, names like Bajaj Finance surged significantly with strong gains backed by positive banking sector momentum and expectations of robust corporate performance. M&M and Wipro were also notable gainers, with Bajaj Auto extending its rally amid optimism around the auto sector. On the mid-cap and small-cap front, several stocks delivered exceptional gains, including biotech and pharmaceutical names that capitalized on positive regulatory sentiment. Turning to the losers, though the market was broadly green, sectors like defense and select capital goods stocks faced profit booking, with the likes of L&T and some railway-related names witnessing corrections after rallies in the previous sessions. This is a natural profit-taking move in what has been an extraordinarily strong week for value-driven segments. Key support and resistance levels witnessed important technical action today. Nifty 50's critical support at the 25,200 to 25,300 zone held firmly during intraday weakness, and the index broke through the important resistance near 26,000 to close near record levels. Bank Nifty showed similar strength, breaking above the 58,500 level with conviction and testing the 59,000 zone during peak intraday hours before consolidating slightly lower at close. These breakthroughs are technically significant and suggest momentum is on the bulls' side. Sector-wise, banking emerged as the clear winner of the day, benefiting immensely from budget expectations of enhanced foreign investment norms for state-run banks. Financial services stocks rallied sharply as investors chased quality holdings in this space. Infrastructure and auto stocks also performed well, buoyed by positive government spending signals outlined in the recent budget. In contrast, select pockets of the market, like select defense procurement stocks, and certain pharmaceutical names faced selling pressure as investors rotated into higher conviction themes. Today brought important regulatory developments that influenced market direction. SEBI's recent notification of the Modernized Stockbrokers Regulations 2026 replacing the 3-decade-old 1992 framework has been well received by the market as it simplifies compliance burden and allows cross-regulatory operations for stockbrokers. This streamlining, which reduces regulations from 59 pages to 29, has boosted confidence in the regulatory environment. Additionally, recent SEBI proposals around enhancing net worth requirements for brokers offering margin trading facilities have been interpreted as strengthening market stability and risk management, providing reassurance to institutional investors about market safeguards. On the commodity front, gold and silver displayed compelling strength today. MCX gold futures surged 4.38% to settle around 150,298 rupees per 10 grams, rebounding sharply after recent corrections and reflecting safe haven demand and positive global sentiment. Silver futures jumped even more aggressively, gaining approximately 5 to 6% and closing near 250,000 rupees per kilogram, indicating robust industrial and investment demand. The sharp recovery in both precious metals today suggests investors are building hedges ahead of potential economic data releases. Crude oil prices remained relatively stable, trading in the 5,900 rupee per barrel range with modest volatility as global markets weigh OPEC production decisions and geopolitical risks. Global geopolitical tensions remain a backdrop to market sentiment, Though today's session reflected a flight to quality into Indian equities as investors seek stable emerging market exposure. Tariff negotiations and trade policy clarity from key developed economies continue to support India's relative attractiveness as a manufacturing and investment destination, providing a supportive environment for equity markets despite some international uncertainties. Looking ahead to tomorrow's session, the technical picture for Nifty 50 remains constructive. With today's close near record levels, key resistance zones to watch are 26,350 points and above, with potential for continuation toward 26,500. On the downside, the important support is established at 25,800 to 25,900, with the psychological 25,500 level providing secondary support. For Bank Nifty, immediate resistance stands at 60,200 to 60,300, with further upside potential towards 60,600 points. Support zones are placed at 59,500 and below that the 59,000 mark. Market momentum indicators remain healthy and breadth has improved, suggesting tomorrow could see continued participation from both retail and institutional sides. Watch for any global cues overnight and early economic data that could influence sentiment at the open. Here's your actionable takeaway for tomorrow. Today's powerful close near all-time highs on the back of strong banking sector momentum suggests selective momentum plays within the financial services and capital goods sectors are worth monitoring for breakout opportunities. However, traders are advised to wait for confirmation above key resistance levels before initiating fresh positions, and always maintain disciplined stop losses, especially given the elevated leverage in options positions. If Nifty closes above 26,350 tomorrow, expect potential breakout moves toward 26,500. Conversely, failure to hold above the 26,000 level could lead to a rapid test of 25,800 support. Keep tuning in for tomorrow morning's comprehensive market wrap and technical analysis. Send in your queries and market observations to our social media handles or email, and don't miss our full market preview before the opening bell. Stay disciplined, stay informed, and we'll see you at the next session. Thank you for tuning in to What Moved the Market.